All right. Well, happy Wednesday, everyone, and thank you for joining the fifth episode of Focus On. I'm Retro, a contributor with the Sustainable Ecosystem Scaling Core Unit, and I'm co-hosting today's call with SES's facilitator, Juan. Today, we are joined by the Centrifuge team for an open AMA discussion. The Centrifuge team has prepared an update for the maker community in which they will share some news on growth within their project, their updated legal structure for US assets, and how NFTs enable a transparent way for decentralizing real-world assets in DeFi. As usual, please drop any questions you have into the chat bar, and our guests will answer questions during a break in the action or at the end of the prepared presentation during the Q&A. And now I'd like to welcome Lucas and Martin, co-founders of Centrifuge, and their team members, Eli, who serves as general counsel, and Jeannice, Centrifuge's partner and portfolio lead, to today's discussion. So team, the floor is yours.
Thanks, Retro. Just so you know the setup today, we're in a WeWork in New York. We have Colin here, and then Martin is here, and Eli is here. But you will see them on their respective screens. You can see their faces. I'll kick things off.
Yeah, to be fair, I'm less worried about the inside.
Okay, I'll kick things off and maybe do an intro and then have all of the folks around do an intro. My name is Jeannice. I am partner and portfolio lead, like Retro had mentioned, and I work with the asset originators on the Centrifuge protocol, as well as some of the institutional investors as well. I've been in the MakerDAO community for, I think, a little bit over a year now, and very excited to be here to give you guys an update today. And then I'll pass the floor over to Eli, and then Martin, and then Lucas can go last. Yeah, you just use, yeah, you.
So hopefully everyone can hear me, because we've got Jeannice's mute, and I'm on mute, and Jeannice's computer working. Anyway,
it's a bit hard, Eli. You're a bit far away from the screen.
So maybe, yeah, I'll turn off. Yeah, it's gonna be a fun.
Okay, so.
Yeah.
So yeah, sorry about that. We'll get this organized. Anyway, my name is Eli Cohen. I'm general counsel of Centrifuge. I've joined about a month and a little bit more than a month ago. I come from sort of a mixed background in traditional finance and crypto. Prior to this, I was at Block One in Hong Kong, developing the Bullish Exchange, which is a centralized exchange. So I've got a bunch of regulatory experience in the crypto space. Before that, I was sort of in traditional finance, doing a lot of work in the bond markets and structured finance. So a bit of transactional work, a bit of regulatory work. And I've been now with Centrifuge for about a month, a little bit more than a month, and happy to be working with the maker community and working with Christian and Eric on the new legal structure that we're developing. And I'll discuss that more later.
Yeah. So sorry, we need to sort out audio. Yeah, Martin, co-founder. So just, of course, helped out kicking up the project and focusing more, I would call it product market fit. So putting all these different little things together, like legal structure, features, etc., that it just works in a decentralized fashion and also cross protocol. I would just move it on to you, Colin, I guess. Huh? Sure.
Hey there, Colin Cunningham. Been at the team here almost a year now. The title's head of BD, but my experience is working at fintech and building go-to-market strategies for various technology companies that I've worked at over the past 10 years. But here at Centrifuge, working a lot with all the people you just met, and really thinking about how we build a balanced platform as we think about all the different partners and groups that we work with. What's the right way to go to market, scale, and build something that's really exciting, but also dependable. So excited to be here and love being a part of these maker community calls. Lucas?
Yeah, so today you're talking to 4 people at Centrifuge about Maker. It started out with me being mostly a one-man show and figuring out how to integrate Centrifuge into Maker, how to build real world assets in Maker. That was like 3 years ago, I would say, before MCD was live. And like the role I still have at Centrifuge is CEO. But of course, with the work we do here together, I'm now contributed a very small part of it. And I'm super happy to be joined by people that know much more about legal, much more about finance, much more about all this stuff that we're doing together. And hopefully you'll all get a chance to ask them questions of what we're doing. The one thing I want to give is maybe a bit of the broader vision of why we're building Centrifuge, and also how we see Maker's role in DeFi, how we see Centrifuge's role in DeFi. And of course answer some of these questions. But of course have been a very long time Maker community member, MKR holder, and excited to be here. Jeannice, we're gonna go quickly through the slides, right, and then focus on some of the Q&A.
Yep. So I'm very happy to see a lot of familiar faces and also new faces today. The way we'll do this is in an open Q&A format, right? So you can obviously still put your questions in the chat, but feel free to stop us at any one point. You know, if you're going to lose your thought, just don't hold your tongue and just ask the question. I'll start with this first pick. You know, here we were at East Denver with in the Winterproof event, right? I think Luca, you guys were talking about that before. With our pro, Luca, Michael's in the middle, and then we have a few other folks from Resource and Teller and so on. But that it was a great event. I was very sorry to have missed it. But yeah, it just, you know, goes to show the close partnership that that Maker and Centrifuge has had for a while. So let me just sort of start with the 101 on Centrifuge, because I'm aware that while many of the folks on the call know what we do, many also don't. So just to sort of set and make sure that we start from the same page. So we are a decentralized finance, asset finance platform. We just broke, I think, the 70 million TVL, total assets finance, currently today, with, I think, new server contributing the additional 2 million to bring us over that bit, which is nice. We have a growing pipeline of high quality assets with good visibility to 200 million to about 400 plus million of originations over the next 6 months. What we are trying to do is to automate securitizations, make them low cost, so that even if you were a small fish in a big pond, you would still be able to go on Tinlake and be able to securitize your assets, lowering the costs and barriers to entry. And again, you know, for us, the P2P network here minimizes fees and makes everything really transparent for investors and asset originators. And if you go to our UI right now, tinlake.centrifuge.io, you will be able to see the pools that we have live. You'll be able to see the NFTs that back the pools. And yeah, feel free to explore. And now I will throw the floor over to Lucas, who will take us through the next few slides on our vision. And then Eli will do the last bit on legal structure.
Yeah, I mean, Maker is maybe probably considered one of the founding fathers of DeFi, I would say. I mean, when we were talking about stablecoins, like the word DeFi didn't even exist yet. There's no ecosystem, so to speak of, and a lot of it was around the idea of, okay, well, actually, like blockchains, Ethereum gives us the power to build a better financial system, right? And if you think about finance, it rules everything around us, right? Like we have, we've seen all what happens when it goes wrong, but we also know just how big of a part of our lives it is, and in a lot of ways, I think Centrifuge and Maker were both a strong mission in addressing this, right? I think one of the big, like, surprising numbers to me was when we recently found the statistic that it's estimated that about 9% of the global GDP goes to financial intermediaries. Those are banks, credit funds, service providers, stock exchanges, credit rating agencies, like all of this stuff, right? That in the end, it ends up in a system that I think most people don't necessarily think are really valuable to what we want, right? Which is a fair financial system that gives everybody the opportunity to build stuff, to like get a car loan, to get student loans, to invest in real estate, to earn yield, right? All these things where like now in today's world, we're in this place where like it's really like an elitist system closed off to most, not governed by anything that is transparent to the individuals. And I think Maker wants to solve that by building a bank. What Centrifuge wants to do is we want to build better ways for users to access this bank and to borrow money from that bank, right? So moving on to like how, and maybe like DeFi really is the missing link here, right? Like DeFi has like, this brings transparency and openness at the core, and that drives I think much of these core values that we have can bring them into reality. How it works, like the simplest description of what Centrifuge does is we're basically building all of these building blocks in code, instead of like relying on like off-chain structures, sort of building a credit fund that exists in as much as possible on chain, and pairing that with the legal structure that gives the recourse, the way for people that interact with that code to know that it's backed by something real, that they will get their money back actually if the default way of using the on-chain system fails. And so maybe also that's like a good segue into the legal structure, which of course is like a very big part of what we're building, because without that, like the code that we're deploying, the smart contracts that represent some of these real world assets on chain are not very useful. But yeah, so maybe you want to keep it brief and hand over to Eli to give a bit of an update on what we're doing there in terms of the trust structure for US assets.
Thanks, Lucas. So what we are looking at is sort of a formalization of some of the structures in the pools that we've been using. So what we would like to do, and we've been working with Christian, the next slide here is actually Christian's work product, so I will not take credit for it, but it's a very good summary of the structure that we want to do for the pools going forward. And here we're doing a number of changes, a number of steps in order to protect the maker community, in order to protect the investors generally, in order to create a more formal and traditional structure into the pools. And there'll be a number of different steps. I'll sort of go through those, but you can see here in the schematic that the flows and how the flows will work going forward. So we'll have the eligible assets going into the SPV, which as we do today, but we're going to create a separate, what's called a lockbox. A lockbox is kind of a term of art, a legal term of art. It's generally used in the receivables context, but what it really means is an account or a wallet, in this case, perhaps both, which will be controlled by a trustee. So the trustee is a new concept that we haven't used before in the pools, and the trustee will be interposed in order to make sure that the maker community and the investors generally have a way to enforce their interests in the case of an event of default, and to ensure that the collateral assets held at the SPV are in control of the maker community and the investors generally, rather than the issuer or the parent, as is the case in the current pools. So this, maybe go to the next slide, Jeannice. So the goals here, as I said, there's sort of a range of goals that we're trying to interpose to improve the structure of the pools. The lockbox arrangement is one step. That's the arrangement which ensures that the payments are ring-fenced, so that the issuer doesn't have access to the payments once they've been made, and so that they're not subject to the risk of the possible insolvency of the SPV. The use of the third-party trustee is also another step. That will, again, as I said, protect the interests of the community. In the case of a default, will allow for an entity who is, in charge of the assets to make sure that the real-world assets can be liquidated, and any of the proceeds for that liquidation can be then distributed to the token holders, to the maker community, to the investors generally. That allows for a much more robust kind of bankruptcy protection than we have today, and much more in line with what you would see in the traditional markets. The next step is also a pledge structure. So there's a series of pledges. The pledge is the pledge from an SPV to the trustee, and this will allow those assets to be assets held by the SPV and the SPV itself to be protected from any kind of issuer default, issuer malfeasance, because the trustee will be in charge of controlling the assets rather than the issuer itself. So the asset originators and the issuers won't be in charge of the flow, the cash flow, or it won't be allowed to sort of control the SPV without the interposition of the trustee. And the way we're intending to document this, although the documentation is still in draft form, is by way of an indenture. So an indenture is a type of agreement that's generally used for collateralized obligations in the traditional markets. And what we are using it here for is to make sure that the trustee has the control over the interests that of the SPV and the assets held by the SPV. So I'm happy to answer any questions. Christian, of course, is going to be instrumental in helping draft the indenture. We'll also be, of course, needing to discuss this with potential trustees. Most of those trustees exist in the real world market, but aren't very familiar with DeFi. So there will be some discussions and some probably technology developments that we'll need to do to assist the trustees in fulfilling their role and making them comfortable with a role that they're not very familiar with today. So that's kind of a very high level snapshot of what we want to do. There's a number of different steps and a number of details yet to be worked out. The indenture that we're working on is really just a pro forma kind of document, and the details of all the specific arrangements will have to be worked out by issuers and by the trustees, specific trustees for specific deals. But what we want to do is we want to have a framework in place that the community feels comfortable with, that the maker community feels comfortable with, that the real world asset core unit feels comfortable with, so that we can then go and discuss that with potential issuers and potential trustees. So that's sort of where we are today. It's still a work in progress, much work still to be done, but we hope that we are on the road to a better and more robust legal structure for the pools.
Lucas and team, I wanted to say that there's some questions on the sidebar. I don't know if you wanted to leave them for the end of the presentation or to tackle them now. It's really up to you guys.
I can, speaker. I can take the first question. I think, Luca, you put it on slide. How open is Centrifuge to work with TradFi originators, etc.? I think you can read the question yourself. So 100% open. That's exactly the idea, like Maker is an open protocol, Centrifuge is an open protocol, so basically everyone can use it, and we would like to be super supportive to all these efforts. So we think, that all these originators out there, most likely, if they are experienced, that's what we are looking for. So fintech is one thing, but really existing parties out there either already do originations, do fund managements, etc. We would like to convince them using the infrastructure we are building to make it even more transparent. So if you look back in the past, I think there is two things we would like to achieve: kind of automate work intermediaries do now, and secondly is actually make that transparent and traceable through blockchain, through the protocol. But what you still need is the expertise in the underlying assets and someone who's able actually to do the due diligence, the underwriting, etc., and let those different parties collaborate using the infrastructure. That's the idea, So the experts, you still need them, and also I think a lot of the traditional structures you see out there, you need them as well. If you still need an investment bank to put it all together, that is most likely the big question, you know. Okay, the next 3 questions.
So I'll take the next couple questions here. So the Maxime's question, sorry, let me just go up. So the repayments of the underlying collateral. So the repayments of the underlying collateral would go from the to the SPV and from the SPV to the lockbox. So that's all happening off chain, outside the chain. There will then be a transfer mechanism still yet to be worked out in order to convert the cash in the real world markets, in the fiat cash, into USDC, and the USDC into DAI that then would be distributable to the token holders. So the lockbox itself is not an on-chain, won't have any on-chain aspects to it. The lockbox is a very real world traditional fiat account with the transfer and translation mechanism that we have still to be worked out, depending on the capabilities, the technological capabilities of the trustee. So that's sort of where we are in that. In terms of opening to the review of the legal documents, absolutely, without any doubt. I've already sent a draft of the indenture over to Christian, and we certainly expect that outside counsel will be used. We've used our outside counsel, Manat, to help develop the documents, and absolutely, we expect Maker to have their outside counsel look at it, and we're happy to have any calls to discuss with them ourselves or also with our counsel as necessary. In terms of Dave's question on the beneficiaries of the trust, the token holders are the beneficiaries of the trust. So the indenture is worked out so that the trustee acts on behalf of the token holders. Obviously, the drop and the tin will have different rights vis-a-vis the issuer, but the trustee itself will be acting on behalf of all of the token holders. That's the way it has to work. That's the way it normally would work in the traditional markets with a bond issuance. What's next?
Curious question, I think.
Yeah. Instructed to fill in, make the payments to lockbox. Yeah, I think that's, so Frank's question is a very good one, but it's really going to be very deal specific. It's going to depend a lot on what are the assets that we're talking about. Is it a mortgage? Is it trade receivables? We'll have to do it probably different ways depending on the types of assets that are going to be involved, the types of real world assets involved, and the issuers and where they're located and what currency the receivables might be in. So there'll be a number of different elements to that, which we can't really do on an abstract pro forma basis. It'll have to be kind of deal specific.
I mean, maybe the things, I think like 6S here had a structure that is interesting, which uses a broker dealer that has instructions to convert fiat to crypto and make sure it ends up in the right wallet. There's other things that Harbor, for example, actually they're also commenting in the call, they've been working on like an automated flow from fiat to USDC to DAI that can be sort of controlled and insured with other means. So I think there's ways that we're looking at the best ways there. But yeah, the lockbox is to ensure that there's as little human intervention and also, like, of course, human cause for error that in ways that the money can get lost. And this depends on, of course, as Eli mentioned, right, the currencies. Is it where the money is coming from? If it's European, if it's American, yeah.
And I think really the lockbox, the main purpose is really that a third party, a trustee, which is obliged to actually follow the interest of the token holders. So the investors is controlling the cash flow and not the asset originators or someone who is close to the assets has control of the cash flow anymore. So actually no funds can be stolen, can be used for different purposes, etc. So that all the cash drawn from the protocol basically goes to the borrowers, and from the borrowers back to the protocol controlled by the trustee and the lockbox, that you'll still be able to pay the service fees, etc., but not kind of take money for something else.
So I think the next question from Kirill is, yeah, I think that's something we definitely intend to work on going forward, but we want to make sure that the new structure is fully agreed before we get to the point of converting existing SPV structures. We certainly expect and intend to do that, but I think that's a second step. We need to finish the first step first, and to make sure that the maker community and the core unit is happy with the documentation as we have it, and we have trustees that would be able to act on behalf of issuers. So we'll have a couple of different things to work on between now and the next few weeks, but we do expect, in some time in the near future, to be able to start working on the conversion of the existing SPV structures. Yep, and then, yeah, so I'm just well, yeah, the KYC is an interesting point. I think it's something that we'll have to discuss with the trustees, the potential trustees, where we think that the beneficiary should be able to pass through the KYC, because we will have permissioned them with our KYC in advance of that anyway, and that's already going to give the trustees, we think, probably everything they need. Now, if there's a gap on the KYC side between what Securitize is doing for us now and what the trustees think they might need in the future, that's something we'll have to address. We'll have to maybe work with Securitize to develop a KYC that the trustees feel comfortable with. But it is an absolutely key point. We have to make sure that there's an alignment for the KYC processes between what the trustee would need and what we do today at Securitize.
And Eli, it's Christian. Sorry. I think the other point on the KYC, and if you go back, Jeannice, if you can go back to the prior slide 6. So, part of what we were trying to solve was that in the previous structure, the drop tokens were never actually, there was a subscription agreement, but Maker never signed anything because Maker didn't have an entity and there was no legal entity in which to sign. So part of trying to solve for somebody or something having rights with respect to the drop tokens, in addition to just putting them in the vault. And unfortunately, we're still left in a way with paper documents. The idea was to, have a Cayman Foundation or a Cayman Trust, I'm kind of indifferent as to the two, be the signatory to the subscription agreement for the drop token, at which point I think it's the drop token, that entity then that would arguably be subject to the KYC. So the trustee would, in theory, be looking to that Cayman Island entity, much like it probably did in the success case, look to the Cayman Charitable Trust, and understand who is or what is at the Cayman Island entity. So I think that's where the KYC would be handled. I think it's a good question. It still needs to be tested. I mean, we've only tested it on success, right? And we, but that's the principle, that there is a legal entity in the Cayman Islands that can be KYC'd, because that legal entity will have directors and, like in a Cayman Foundation, it would have a supervisor, which equates for KYC purposes as a controlling person.
Just Christian, if I could just add one point to that. I think that the trustees will expect that the end beneficiaries will also need to be KYC'd, or at least checked for financial crimes compliance and sanctions if they're distributing cash based on the liquidation of underlying assets in case of an event of default, which I think what Dave was referring to is definitely something in which they're going to need to look at the end beneficiaries and the end users of any kind of cash distribution, whether that's converted into DAI and distributed to the token holders. I think they'll still need to make sure that any cash is not flowing to sanctioned individuals, people on the SDN list, and probably other purposes as well.
Yeah, I could agree.
It's Luca here. I just want, rather than a question, I wanted to take this opportunity to give like 1 minute perspective of what you guys have been doing and we have been doing on the real world finance side. the community, given that we have a few people here. So first of all, it's great having this type of presentations, because we have done a lot of work on Maker side in the background, trying first of all to socialize the fact that we are an infinite pool of liquidity with very, very low cost of capital, i.e. we should try to attract great sources of credit rather than startup-y type of equity financing. And this is the only way we can scale protecting the currency. And the second point, we've been trying, and Kristen has been incredible in this, to help people like yourselves creating a structure that can allow us to scale, trusting the model and not just hoping that there is something behind the token that is in a vault. So I think there is a lot of work here, even if the Maker community hasn't seen Mix approved. And I know that Maker community is impatient and they have all the rights to do so. So I'm very happy to support you guys anyway, and Christian as well, and we can engage external counsel to let tech providers like yourselves mature so that we can use those rails to onboard great credit. So I think I'm definitely looking forward for this. What is the question is, then another question is, what is the timing you guys think will be needed to finalize a structure that can be usable and for us? I mean, I'm not asking for weeks, I'm asking for quarters, so that the community can have an expectation about when we can start onboarding through your rails.
Yeah, it's a good question, Luca. And again, yeah, thank you very much. I should have probably thanked Eric and Christian for all the hard work that they did. The MIP6 methodology that they prepared and posted to the forum was instrumental in all of our thinking in terms of getting these documentation in place. They've been incredibly helpful, and we wouldn't be able to do this without their input and their assistance. I'm sure there'll be more work. Obviously, there is more work going forward, so apologies for that, Christian, especially. But there will be quite a bit of work still to do. I think that we've got a draft of the indenture. Obviously, outside counsel needs to look at it. It needs to get reviewed. I think we can hopefully have that finalized in the next 2 to 3 weeks. Once that's done, I think other things will be much more straightforward. I think the only thing that we have a dependency on is the potential trustees. And this goes to a question from Kirill. We've had a couple of calls with potential trustees with the traditional kind of trust banks that you would see in the traditional markets. We didn't find any red flags that they think that this is going to be impossible, but it's going to take some effort to educate them into exactly what we're doing and what the DeFi world looks like, what Maker is like. So that is a dependency on external third parties, which is hard to predict in terms of timing.
Thanks.
I think there was a question from Tim. If you wanted to ask it, you had your hand raised a while ago, but I wanted to make sure that you got your question answered.
I think we answered it earlier, but
I think there was only one question in the forum post that we could answer here. When will more Centrifuge projects apply? It's been a while. I think I'm going to sort of add my piece, and happy for the rest of the team to share as well. We're trying to be really cognizant about protecting the DAO. And so, in parallel with all of the work that we're doing, I think with the timeline that Eli had mentioned, as well as ongoing work with the RWF core unit, for me, it's really about making sure that the DAO is comfortable with the legal structure and the protections that go along with it. And then, we have a lot of asset originators that are very impatient, that are raring to go. So there's not a lack of pipeline at all. It's really wanting to make sure that we're doing things the right way. Any other questions for the group?
I have another question. It's Luca again. Can I?
Maybe Victor. Sorry. Back to Luca, your question, legal structure is one thing, but also the quality of assets is a second, that is exactly this kind of pools actually waiting to be onboarded. The second stage of, I would say, most likely quality assets, you in part most likely have a few conversations already. Is a little bit too early to talk about it in every detail, but those pools cannot just scale, but also provide the quality. If I just look back into the post Christian and Eric did, what you are actually looking for, so being a senior lender for high quality, low risk assets, it's exactly, I think that we have an aligned interest.
No, and I think we already have at the core unit level and Wheels core unit several organizations with very high quality potential lenders, borrowers. Sorry, it took us a long while to socialize who we are with those guys, because those guys, they were thinking about DeFi as a place for crazy degens and not institutionalized enough. So I think for us, the structural and legal rails are the bottleneck now. So we're definitely looking forward for you guys and others to figure this out. The other question I had, and then I promise I'll leave the space for others to ask questions. Could we use, for example, if Maker wanted to onboard as collateral treasury assets that are open, like securities that are traded in the open market for many reasons, for like to diversify our USDC exposure, etc. Could we use Centrifuge rails to tokenize securities, or are you still focused on a tin drop construct that is specific for structured lending?
Lucas, maybe you would like to answer it more from a technical perspective, but how I see it, it's basically an index token on an underlying collateral where you basically use a centrifuge as a revolving pool to on and offboard those assets, like, think of corporate bonds or treasury bonds or whatever you would like to do there, where you most likely, do not need all the tranching we are doing right now. And they're actually what we produce is an index token representing the underlying asset. It's a fluctuating price, whatever the bond price is and what is currently in the portfolio, and then Maker will be able to participate. You can even securitize it if you wish, but that would be a different structure. It's most likely not a fixed income portion in a senior structure anymore. It's more kind of a split of a waterfall that could be really basically just, tin token, how we call it now, which is basically a token which is directly representing the underlying value. It's also not really an NAV because you just take the NFT price, which is a bond, and then put that into the actually this price and driving the token price of the investors.
Yeah, I don't think I have much to add here, Martin. I mean, the thing how we build Tinlake and sort of how we think about this infrastructure is like it is really a set of very modular smart contracts. And yeah, like the two tranches make a lot of sense for like that, where like an issuer, where we want to have an issuer to have a lot of equity, meaning like they take the first loss and Maker is super senior. This is not necessary in all situations. And then yeah, you can just have a single token with where like Maker just could, for example, take the whole portfolio. Maybe Eli, do you have context on the IC solution that you're talking about?
Sorry, was that for me?
Yeah. Like you mentioned the IC solution, you need to work through license BD. IC solution.
Yeah, no, it's Intercontinental Exchange, New York based, or I think they're European based now, actually. No, I see the security tokens coming into play in the next 24 months, maybe less. So I was wondering if Centrifuge, like Lucas said, that's something that you guys might do in the future, where you get away from that 2-token model, 10 drop, and perhaps help, I don't know, I'm thinking out loud, OpenSea do a security token, right? And how that can play well in the sandbox for MakerDAO. I'm just thinking out loud, but I do think that it's going to be a strong push from institutional players to get their hands on tokenized securities in the next 12 to 24 months.
Yeah, I think Frank, that's right. I think that ICE being a regulated exchange is only going to be able to offer that service to licensed broker dealers, and they won't be able to offer directly to the retail markets. So what we would be doing would probably not be directly competing with them if we would be able to do something like that. But you're right. The institutional players, they certainly will be expecting to get into these markets as much as they can. Planning to.
So Tim Black asked the question if any of the legal improvements plan to move on chain, which I think is really like our philosophy is like we took like this old school structure of like a credit fund and try to figure out, okay, how do we replace it with smart contracts? I mentioned the reality is it will, without major without major changes in laws around the world, like there needs to be like some legal entity, some that does complete the picture. But the goal for Tinlake really is, and that I think it already does today, is that there is like an on-chain there's an on-chain representation and the logic of how to distribute funds, how to accrue interest, how to value these assets, like all of that is on-chain and fully transparent. And so we are pushing as much as we can actually on-chain here. And that has huge benefits for investors like Maker, for the asset originators and issuers, because they don't have to worry about like all of the fund admin anymore, right? Like they can tap into different sources of liquidity, Maker and other investors. And the same goes for like the trustee and the lockbox. Like I think that a trustee would directly sign a transaction in MetaMask or something similar to that, and like sign something like that on chain. Like we're still a bit far away from today, but that will change. And of course, like we're sort of like that. What will this will look like in the future is that like in a way the trustee is almost, you could almost think of it as an oracle provider, the lockbox as well. Like maybe there's going to be auditing firms that are going to be working with like Maker to actually then provide third-party statements on what's going on, where the money's flowing, and provide that as a feed into it. And of course, like then like the overall contracts, the on-chain like individual loans that are in this pool, right? All of that can sort of serve as this base infrastructure. And it's really the vision for what we have, right? Because if we just take like a boring like say bond portfolio that exists entirely off chain, it's great. It can be great collateral for Maker. It can scale really well. But I don't think that's the future of where finance should go, right? Because the future of finance is France, or the future of finance is DeFi, which is that you have this transparency. You have trustless blockchains that are used to create these products, and not just used to like provide liquidity to off-chain products. And that's really where we want to go in the long run. But of course, that's a big vision that will take time to implement.
And Lucas, is there any, with regards to your team getting involved with Ave's ARC, and the news that SIBA, the Swiss company, bank, is getting involved, is there anything that MakerDAO as a community can do to use something, a tool like, and I'm just thinking out loud, D3M, to maybe help get some liquidity there? What are your thoughts with your partnership with Ave, and also what can MakerDAO do to help scale the entire ecosystem of RWAs, in your opinion?
I think like D3M for the real world asset market would be absolutely amazing, and not just for like Centrifuge issuers, but also for DAI and Maker, right? Like if you think of a healthy financial system in which Maker plays the role of issuing DAI, they want to issue DAI whenever there is demand for more DAI, and they want to be able to take it off the market when there isn't. Aave here, the Aave protocol can play the counter role, right? When users who own DAI want to earn yield, put it into the real world asset market, that means Maker can reduce DAI supply, and sort of like those users can sort of provide liquidity to these assets. Now, when DAI demand changes, for example, then Maker can go in and actually provide more liquidity to the Aave market, and sort of in this way, like it creates liquidity where there isn't today, right? And it allows basically for supply demand of DAI to be more actively managed, or not more actively managed, but actually for it just to balance more naturally. And I think that's like really, really cool about it. And yeah, I think it will also require a bit of legal work to figure out exactly how we can implement D3M with the trust structure, with sort of the legal topics we discussed here. But ultimately, like that I think can work quite well as a step for Maker.
And Lucas, this is Christian. I agree with the questions, particularly from Tim, about how we can bring this all on chain. And I think you guys have taken a great first step. The picture that we showed on slide 6, I'd like to get rid of it eventually and have as much as possible on chain. The reason we have that picture is because we're not there yet. But I think to the extent that we can bring as much transparency and reduce the costs at kind of different segments of the project, I think that should be the goal. And you guys have done a great job of attacking one. And I know when I first raised this a couple of months ago, I said, well, can we have bank accounts be governed by smart contracts? Because then you really don't need, can you have a US dollar denominated account governed by a smart contract? Because it's actually just digits anyways. I mean, it's not like there's actual dollar bills in there that somebody has to do anything with. But yeah, that apparently is not available yet. But ultimately, if you can automate as much of the process as possible, I think that would be the goal. So yeah, we'll get there. It's just not there yet.
Yeah, I just wanted to add on this, Luca, here again, that what Frank said and what Lucas said, I think at Real World Finance plus myself, that I'm still not part of, I'm incubating my core unit, but let's say lending oversight, we have vision, and the vision is for Maker to become the super senior lender of last resort across the whole DeFi. And potentially also, so plugging to the, letting other people, other protocols doing the heavy lifting and benefit from most of the returns, to being junior to us, and also being the most potential, the most powerful on-ramp for institutional investors. Like if you're an institutional investor in TradFi, now you have billions of dollars of long-dated collateral. If you want to enter a play DeFi, you need to liquidate that, put it in USDC and on-ramp, which is, it's antiquated. They could use that collateral as a pledge, and then we would mint DAI for them on chain, and then if they want, they can stay on chain and play on chain, which is very powerful because no slippage and no need of liquidation. Now, I think why we are stressing, and Christian is stressing it more than us, but to the community, it is that to do that, we need to be safe and comfortable that the quality of data is there. That's why this work that is painful of legal and structuring is super powerful, because that, as you know well, sometimes behind the hype, tokenization of real world assets, there are no real legal rights or real control of the collateral. We need to make sure that this is not happening. But I think so. We are doing a lot of work in educating the community, helping people like you guys structure yourselves, and bootstrapping with some other counterparties. But we will get there. We want to be as programmatic as possible in providing liquidity to real world assets and other DeFi protocols, but being super senior to the rest and just having quasi zero returns, but expanding the the footprint of the DAI in a sustainable way. So hopefully in 2-3 years time we'll get there, but now we're all together trying to bootstrap this. It is very exciting.
I agree. It's cool to hear that from all of you guys who I think have shared similar similar thoughts. Like bringing real world assets into Maker to some extent is about like stabilizing DAI by making sure it's backed by diverse and stable collateral. And that should be a mix of all these different assets, right? From crypto native to real world assets across different jurisdictions, different asset classes, and so on. But but sort of like once that part is fixed and we have like real world assets in Maker to supply all the DAI that we need, at that point we also need to think about, okay, well, how do we make DAI actually and Maker and DeFi as a whole, the infrastructure that like all these real world assets that are now backing DAI actually use, right? And exactly that's where we need to go to, where we need to do this work to then do things like the D3M integration with Aave or other steps to bring more and more of that on chain.
Seb, you had a question?
Yeah, I have a question. So I think the presentation was great, and there is a progress on the Centrifuge front, so that's awesome. I was just wondering on the Maker side, especially on the Cayman Foundation, Trust, or any other kind of entities, what are the situation if everything is okay on our side to be able to hold the drop security? It's more of a question for Christian that did an excellent job on setting everything up, but just to check out.
I mean, I think it's just really the same issues we've discussed before in terms of, we will need a legal entity to sign the subscription agreement for the drop token, because and the indent, that can have contractual rights vis-a-vis the trustee. And I think that was one of the fundamental, issues that we had in the original structure, is that there was nobody, tokens were deposited in the vault, which was great, which is what we want, but there was kind of a bifurcation between the tokens being deposited in the vault and then there being a subscription agreement that sets forth terms and conditions. And Maker didn't have any ability to enforce those terms and conditions. All it had was a token in a vault. So it's really just trying to bridge that. I think the intention, at least with respect to this particular case, is to keep the Cayman Island entity as simple as possible, because what's unique about the Centrifuge case, is that you've actually bifurcated cash flow with legal rights, right? You've got the concept of the token that's deposited in the vault that is representing the drop. Yet you then have contractual rights that are needing to be documented on a piece of paper. So as a consequence, you need to have that real world entity to enforce those contractual legal rights. They may be limited in this case to whatever is provided in the indenture, but you will need that legal entity. But the cash is actually then going through the Tinlake protocol, right? So when I say cash, I'm collapsing fiat to from fiat to DAI into payment into the Maker vault. That's all being done separately. So you don't need, like in the success case, where a trustee is actually holding the cash, because that is just coming out of the lockbox and then going through. And the Tinlake protocol is really kind of functioning as the paying agent in this particular case, is kind of how I viewed it. The trustee initiates the dollar payment into the protocol through an exchange agent. And then once DAI goes into the protocol, it gets distributed back into the Tinlake protocol, gets distributed back into the vault.
Yeah,
so
but just to
your point, your point, Seb, I think the Cayman Island Foundation will have an exceptionally limited role in acting with respect to whatever matters are set forth in the subscription agreement. And
Yeah, I
then
fully agree.
consequently in the trust, indenture trust.
Yeah, I just wanted to check if we solved the last piece that was not a big issue, but I don't remember exactly, like the relationship between an executive vote on the maker side and the trustee in the Cayman Island. If we have solved the fact that the trustees are not super willing to act and look at the blockchain every day.
On that, no, we haven't gotten to that point yet. And it'll depend on what the actual indenture says, and Eli has sent it, and we'll have to see what kind of voting rights and what decision rights the drop in tin token holders have, and then work our way back up through the chain based on that.
Thanks.
We're, I think, almost at the top of the hour. So we're happy to obviously answer any more questions. If you want to send it to us directly on the forum post itself on Discord. But Juan, Retro, do you guys do a closing? I recognize that this is also a recording. So
yeah, no, I appreciate the discussion from both Centrifuge and the community on the call here. Just as a quick reminder, like you said, the recording of this call will be made available on the initial forum post announcing this call. And as another aside, I'm also working with the resource protocol to get the recording of the winter-proof panel that was held over ETH Denver, and I'll share it on that forum post as well. So if there are any other questions, please direct them to there. Otherwise, Centrifuge, if you have any other closing words, again, thank you for joining us.
yeah, thank you, everybody. Thanks for the participation, and we welcome any further discussion. Thanks, Juan. Thanks, Retro. Thanks, everybody.
Yeah, our pleasure.